Hey everyone, and you are watching What's Up Ryan. And in today's episode, we're going to be covering about whether you should go all in on crypto right now. So I think everyone is starting to get a little bit excited, especially when Bitcoin is kind of sustaining. Altcoins have been doing awesome. And I think we better address this right now. And we are starting to see even the mass market or the mass media starting to show those signs of confidence and bullishness. And before we really get extremely excited, because right now, right, the hardcore folks are still in, okay, and the hardcore folks have also had the confidence to start telling their friends over a beer, hey, I just recently made an X amount in the altcoin space. Bitcoin is now hovering anywhere from $3,900 to about $4,000. That has been relatively flattish, but the overall UTXO transactions have been picking up, meaning that there's actual data and there's actual transactions happening on the main network as opposed to the previous times when the UTXO was not moving. And when UTXO was not moving, you would see still a lot of price movement on exchanges, but this time around everything seems to be consolidating very, very well. In fact, you're seeing the price on exchanges stay relatively stagnant, but the UTXO has been going up. And also, a lot of larger wallets have been actually accumulating Bitcoin. So, what has been happening, guys? So, we're going to be covering all this in this episode, and I think it is best to kind of look at it from a holistic perspective. And if at the end of this episode you are able to kind of answer and tell yourself that all these things I have already done, perhaps maybe you can go all in. But anyway, this is non-financial advice. Whatever that we discuss on the channel is always for educational purposes, entertainment purposes, and at the end of the day, it is always best to do your own research. All right, so let's get into the episode, guys. Thank you guys for watching, coming in. Yes, so Jay Constant, nice to see you. And you guys who are watching Herbert, of course, we had a little bit of a short conversation at the beginning. He says he should go all in, sell your house now. Well, you should never do that, right? Because if you sold your home, then where would you say? Where would you stay? So anyway, I'm gonna be showing you a piece of data that I kind of saw that interests me. No, I'm not going to show you coin market cap because that's like kind of boring at the moment. But I'm going to show you this though. So the ICE cryptocurrency data feed. All right, and so a very quick, where does this come from? You can go to www.theice.com, and from there you can actually pick out the data. And I think right now, okay, if you look at what they're trying to build, okay, so it's going to be an extensive portfolio of venues, so 30 plus trading venues, markets and exchanges providing 200 million plus updates daily, okay, across 400 plus crypto/fiat currency pairings. Tick by tick price discovery, okay, so that's pretty straightforward. Comprehensive historical data, value add statistics, best in class infrastructure, and of course complementary products. So why are they starting to do this? Okay, so right now there is no way that you can safely say that you can pull off the data from trusted sources. Well, at least for them, they don't feel it's trusted. What is the definition of a trusted source? Well, obviously these people are pulling data from the exchanges, or at least they want to pull the data of the existing exchanges, just like the rest of us. Just like whenever we go to coinmarketcap.com, though that data is being pulled from the exchanges via an API, right? And through that API, you're able to gather the volume, you're able to gather the price across all the exchanges, the number of coin supplies, right? That's a little bit questionable because you don't really know whether the smart contract that they use to integrate to pull up the circulating supply should be across all the respective exchanges. Then from then the existing supply, which is the main minted supply, it's always via the smart contract when the token was when the token was first created. Hence, whenever there's a swap, you notice that, or whenever there's a swap, you can't really tell until the swap is over. So I mean, CoinMarketCap has done us quite a big favor, okay? But right now, obviously, ICE does not feel that, these data sources are reliable. So they are planning to create their own, which is to partner up with Blockstream and, just pull the data from there. So what I'm thinking is, so where does Blockstream get its data? Is it truly via the networks themselves? So there is going to be a comprehensive list. So here, take a look at the crypto assets at the moment. So you have Elf, Ardor, Augur, okay, and notable ones like Basic, BAT, right? Very popular. Bitcoin, of course. And I'm surprised that you're having Bitcoin Gold, and I guess maybe to them they feel that they want to offer this. BitShares, there's CyberMouse, which is CMT, Bidem, Decentraland, Digibyte, Doge, EOS is there, Ethereum, Ether is there. You have Huobi that is there as well, Icon, Kyber Network, Litecoin, the greats. And I think you have, of course, Stellar, Tether token, okay. I'm not sure why stable coins there. It's a bit weird. Maybe there's a reason for having these stable coins there. Ripple, everyone's favorite coin, So and then hey, Quantum is there as well as one of the data feeds. Okay, so yeah, so guys, what's the purpose? Okay, so the purpose is what I assume. Okay, what I assume is that once you have all these data feeds, you can create multiple indexes if you want. Okay, so let me just share with you. Indexes are based on of either one cryptocurrency or a basket of cryptocurrencies, or a single, usually a basket of stocks, right? And the purpose of an index is to draw data from that particular trend movement, that price movement, or at least an average price that will be determined by a weighted average. So give you an example. Let's say I call this the top 50 smart contract index. Okay, so you're going so this top 50 will be determined by a particular analyst or a group of analysts that are going to bring all these top 50 smart contract platforms and put them in one particular chart. And then from then you'll see the average price based on, and of course the analyst will determine, say for example, how much percentage of this fund or the price is going to be determined by EOS's movement or Ethereum's movement or Icon's movement. Okay, but they have to all fit into that criteria. There's going to be a very strict criteria that, well, not really strict, but as in there's going to be a criteria that is going to be able to put them all together. From there, okay, so once the index has been created already, right, there's going to be it's going to be so much easier for fund managers to create products around that. You can create a derivative product around that. That means you're not gonna have any physical delivery of any of these tokens, okay? But you can, okay, that's the unique beauty of it. You never know, eventually could there be an actual delivery, and it really all depends on the fund manager or the financial institution that's carrying the products, and that's what I anticipate in the next few years, especially once this space starts to get really established, right? And all these things are up and running. You're going to start seeing that customers will start requesting, hey, I don't want to buy all of these cryptocurrencies. I do not know what's going on, but I want to get involved, or at least I know quite a bit of it, but it's very challenging for me to go and start buying all these cryptocurrencies. Could you, being the financial institution, you are the professional, could you create something for us, because we want to get involved? So this is what's been happening, all right? The reason why there's even all these things being started, or at least all these things being established, right? Custodial services, indexes, pulling data, they are getting ready, okay? I think many crypto YouTubers already understood this, okay? Because this day and age, everybody knows that this space is going to turn very, very hot. And we believe that is true, all right? Even Cryptogrinders, we believe that is true. We've been in the space for 3 years. This is our 4th year in the space. We started back in 2016. Channel started in 2017. we have a full-fledged running business catered to media and marketing and creating content and helping other crypto companies tell their story. And we are investors ourselves. We've got involved in multiple projects in the past. At the same time, right now, we've streamlined those projects and we are growing with them by helping them in any way we can professionally. It's exciting. It's really very exciting. And right now, the whole space is evolving into the whole STO, all right, or whatever they call it. IEOs are, by the way, initial exchange offerings. If you're a little bit new to the channel, that just recently kind of popped out with Binance actually doing their very first IEO with BitTorrent. And so what IEOs does is that they are like the third. Okay, so exchanges are taking it upon themselves to facilitate the fundraising round. Okay, and apparently that sold out in seconds, and that started to create quite a bit of demand. In fact, quite a lot of demand for Binance tokens, because what it's anticipated to be is that I'm now going to have exclusive listings on my exchange. If you want something really solid and a good business or a brand name that's potentially going to come on board, right? You're going to have to go and be a member with Binance. So you have to be a member you're going to have to be a member with a particular exchange before you even step into the space, right? Before you even are able to participate in an IEO. In the past, as an ICO, right, there was no such thing as exclusivity. As long as you had 0.1 Ether or a certain portion of the minimum requirement of a Bitcoin, that was it. There was no KYC, which is know your customer. That means they would have to take a piece of your identification from a respective country, wherever you are, register, and then you can participate. But even then, that didn't exist, because there was the whole anonymity and respecting your privacy, and that created a lot of scams as well. So right now, the exchanges are taking the lead. Okay, we're going to make sure that we validate all our users. We're going to make sure that we verify all our users before you can even step in. So that's the IEO space. Whether or not there are going to be multiple features, for example, are they going to protect your funds, or at least the moment the funds are being raised, there's going to be a progressive allocation or progressive release. I think that would be awesome, right? Because from there, the exchange is the escrow. Now, I think a lot of folks, are going to be, they're gonna have this thought. Okay, they're gonna have this thought. This thought is are exchanges having too much power? And my dear friends, unfortunately, we have to accept certain things. Okay, we're going to have to accept certain things if we want to progress and start making money in this space, because not everyone can have a consensus on controlling decision making. And if the exchanges have the infrastructure and the talent, which they do, you usually have the people to manage all these things and oversee. They have a full, usually most credible exchanges, they have a full legal team, from compliance to actually handling the paperwork, for example, like vetting through white papers. They want to make sure, and they have the analysts to go down and make sure that these companies are credible and are able to produce what they say they're going to produce. All these things have to be done. And as an average investor, if you're going to be putting in $100, $1,000, do you think you're going to be flying over to that particular project and really vetting the company in such a manner? And at the same time, even if you did, do you think these companies would entertain you? Because they're going to ask, before you even come to the office, right, and speak to the CEO, they're going to be asking, who do you represent? Are you a fund? Are you a high net worth or reputable investor? Are you from the media? And media, they don't entertain, by the way. They only entertain the VCs or the venture capitalists, or any kind of analyst from an existing fund house. Say, for example, Fidelity wanted to go and look at Coinbase, or in the case of GIC, where GIC, which is our investment fund, right, in Singapore, they invested or helped to raise 300 million for Coinbase. So all these things, before they even go and do that, there would have already been multiple rounds of analysis, or at least going through all these things before they would even consider investing. So now let's go into the topic of how do we get involved, and should we get involved? How much of our money should we involve ourselves in crypto? Like the go all in. And I think going all in right now is something that we have to be very careful when we do that. Okay, so I'm gonna be covering that in this episode. Give me a second, guys. I'm gonna change into the drawing board, and then from then you can make a decision for yourself. So when I first started, right, the going all in to me was a term that probably came in from folks that are either they are either Texas Hold'em players, right? Because I think Texas Hold'em is a very popular game in the United States and Europe, right? And from there, people would really, I mean, the term going all in is to get really invested, right? Really invested in a particular coin or the whole space in general. And what really happened was people got wrecked really hard because they never planned ahead. When they decided to do that, they were ruled by emotion. So let's at least, even if you say that you want to go all in, I want to have a few things that you should consider, right, before you even go all in. So let's say if you, okay, and then by the way, I do to a certain extent, okay, I do all in on certain things, okay? I'm all in on property. Okay, and when I say all in, right, okay, let me just cover what I have first. Gold, okay, my business, okay, and of course my crypto portfolio. Okay, so when I say that I'm all in, right, I'm not putting my whole life savings into it, but in a sense that I have my dedication. I know exactly what I need to do, what I'm capable of doing, and when I should do it, right? Because like I've mentioned many times, right, it takes experience. So Herbert was very kind, and we had a little bit of a conversation in the beginning. And Herbert, if you don't mind, I mean, I'm just using you as a quick example. Herbert entered, well, I mean, whether he really did enter at the December 2017. And the question is how all in. Maybe it was all in at the time with whatever resources that he had. But he didn't have the experience to cash out, right? And when he didn't have the experience to cash out, that really probably hurt him from a liquidity standpoint. Could he have used that money or that additional liquidity of whatever profits that he made for other things? Definitely. I think everyone can agree, right, that if we had cashed out, even if we came in late and we enjoyed a little bit of an upside, that was a profit for us. That was already a win. And people who had experience, right, or had a little bit of experience, cashed out, they would now be able to re-enter the market at drastically lower prices. So this is something where, you have to at least have the experience. So right now, you're going to have, you got to ask yourself this, okay? Okay, so sorry guys, just bear with me. So do I have the experience, okay? So ask yourself this. Okay, do I have the experience to go all in? Having the experience, right, is one of the most powerful things. Even if you're not an analyst, right, but you are able, because you've gone through it. And sometimes, right, I would even credit that most of the people, especially certain YouTubers or whatever, right, they have more experience than bankers. They have more experience than traders who are coming in from other fields. They have even more experience than certain analysts, right? Because if you have been in the space as long as I have, right, that's already a strong quantifiable value, all right? And experience is something that no one can take away from you, because you paid either with your time, your money, or both. Okay, you paid for it, right? Whether it was $1,000 to you, and if that $1,000 meant a lot to you, and you got stuck, you would always remember, you see. Or if you entered into a bad ICO and that ICO tanked, you already learned that immediately, because you lost that $1,000 from participating in a shit ICO. And the company either never ever listed, never even gave you the coins, or even gave you the coins and just never listed, stuff like that. And you would remember, because you lost $1,000 just probably considering overnight or over a period of time, right? And that is the thing that you will always remember, because it was a painful experience. Okay, so the next thing is, how much knowledge have you attained, right? And when I say knowledge, right, this is such a broad word, and I'm going to define it right now. So knowledge is something that you have to take note of, because you already start having the you know how to even pull the data. What data do you require? And for me, right, knowledge is one of the best things, because when you know what to do, okay, coupled with your experience, of course, and your application of that knowledge, it's going to be so powerful, and that's how you generate lots of money. Without knowing what to do, if you are not exposed, right, and being able to identify, so back to it, experience and being able to harness the knowledge that you have to even identify an opportunity in the market. So there are ways that you can put it out there. There's the I'm gonna start writing. There is the quantitative. Quantitative. Oh shit, that's like triple T. Wait, quantitative. Okay, yeah, that's correct. Quantitative, yes. Wow, it is triple T. Quantitative. Yeah, okay. Man, you know, when I start writing on this damn thing, right, I always suddenly my spelling just like fucks up. Qualitative. What the fuck? Qualitative. Qualitative. Oh fuck, man. So you see, when going live, right, I always get very nervous, and then after that, suddenly I start like writing shit. Qualitative. Wrong. Sheesh. Well, I never said I was a spelling channel, guys. Okay, grow up. Qualitative. Hey, what the fuck? Well, okay, anyway. Anyway, fucking hell. Quantitative and qualitative, okay? Thank God this is not Learn English with Ryan. Okay, so anyway, quantitative and qualitative. So the difference between quantitative and qualitative, okay? Quantitative. I gotta spell this right, guys, for the video. Fucking hell, I think this Cheryl is gonna fucking laugh. Okay, anyway, quantitative. This is definitely spelled wrongly, but never mind. So quantitative basically means that you're able to pull all the various types of statistical data, whether is it mathematical, income statement, actual data that is pulled from a credible website. So unfortunately, there are no credible websites that I can safely say that is usable at this moment. Okay, I cannot say anything that is valuable because most of the time these websites, at the end of the day, they were created initially with the intention of informing us. Okay, because there is a demand. Okay, daily CoinMarketCap is pulling data, so maybe I would say CoinMarketCap does have a certain level of accuracy. But the data that I'm trying to pull is, for example, network data. If I wanted to pull network data, okay, I would go to Blockfolio or sorry, not Blockfolio, block.info, pulling out those data, and then from then you're able to see the network, how many addresses, okay, all these things usually you cannot fake. Now, another part where you're talking about investing in companies at the moment are not transparent with how much money they're making, how much they are losing, how much transactional volume, how many partnerships they have, what are those partners investing in, and the angle is very, very different from stocks. Stocks, every quarter you have an income statement, every quarter you have your earnings report, okay, and earnings is very, very important because if you cannot put a number, right, to the price of your shares, no one is going to step into the stock market. Okay, no one is going to step into the stock market. And the stock market, the reason why you need to know, you want to have earnings is because is the company growing? And hence, if the company is growing quarter on quarter, you are able to put in money and be more confident to hold more of those shares because it is growing, right? And when it's growing, the price usually will follow at some point. It may not be immediate, but eventually the price will always catch up. So that's usually quantitative analysis. Now qualitative analysis, qualitative, so let me define that. Qualitative analysis, on the other hand, is the fact that you are seeing, are there viable products being built. Okay, so you see, when there's a product being built, right, it is, okay, quality. It shows that right now I am building something for this space, And is that product of quality? Is that product of value? Will anyone even buy it? Will an enterprise, will a corporation even buy up my software solution? Will this corporation even engage me for my experience to help them build something on their network? Another thing, am I creating enough usable products? For example, is my wallet being downloaded to the point that I know that my network is in demand? I have a very solid ecosystem. You see, all these things, right, I'm mentioning to you are the words that we've been using: ecosystem, the number of wallets, the number of transactions, the kind of speed, user experience. But all these are not quantifiable. You see, you cannot put a number to the number of users. Does it mean that now YouTube, obviously, right, they can quantify by saying I have this X number of users, and because I have this X number of users, through a span of time, through the amount of data that I've collected over the years since I started YouTube, I am now able to tell you that per user we are earning this much. From there, they can take this data to an advertiser that wants to put on an ad. And from there, because if you want to put on an ad for this particular demographic of users, this is going to cost you this much. You see, everything becomes quantifiable. Now, sometimes obviously that data can be manipulated. Okay, it can be manipulated, guys, because when you have enough money and power and influence, right? Take for the example of Theranos. Okay, Theranos was that little by Elizabeth Holmes. She claimed that she can do a blood test by taking this amount of blood. When usual cases, right, you have to take in 2 tubes to even 4 tubes, depending on the amount of tests that one has to go through, right? And that is actually very nerve-wracking to take that much amount of blood. Hence, she created Theranos, or at least conceptualized Theranos, that was a valuation of $9 billion. And we've always, especially when we are crypto investors, we look at the board of advisors. Which VC is on there, right? Or which famous face is going to be there? Who are the advisors? And true enough, these are qualitative, right? These are qualitative. Why is it qualitative? If I'm going to give an example. Maybe I shouldn't throw out names, but let's say we put Vitalik on the board of advisors. Does that immediately up the valuation of the company? Well, from a hypothetical, speculative standpoint, yes, you can kind of put a certain value, but it doesn't say that the moment, right? The moment Vitalik, now I'm going to give you the quantitative side. If Vitalik joins a particular project, does that mean that immediately $100 million will come in? That means there's going to be someone that's going to say, the moment Vitalik is going to be a board of advisor or a board of directors on my company, immediately I will have $100 million in terms of funding. You see, from there, that becomes quantifiable because there is a number. So remember this, simply said, quantitative analysis is where you can put a number to it. Qualitative is about eyeballing stuff. There is data, but those pieces of data cannot be quantified. Okay, so let me go on to the next part. How much savings? Okay, so how much liquidity do you have? Liquidity. Yes, okay. So liquidity, okay, is very, very important. As an investor, right, we have to ask ourselves, are we going to have problems when this particular investment is going to take maybe 3 years, 5 years to develop, okay? And that is why, right, the crypto space is so hot. When people participated in ICOs, they didn't have to wait even more than 1 year, okay? When the market was very, very hot, right? When the market was very hot, there have been instances where the ICO was able to raise money in a matter of 1 to 2 months. They could close the ICO because they managed to raise the successful amount, and the following month, if they had done their paperwork with the exchanges or whatnot, and if the exchanges even had a credible track record of even vetting these projects, right, the listing would take anywhere from 1 to 3 months. So you didn't even have to wait very long to even have the chance of you being able to sell. Now, obviously, it would depend on how much and how much volume would there be, but let's not talk about that. Let's talk about the actual address of this part of liquidity. So you as an investor, right, you know that, okay, judging by certain certain from maybe you have an experience in creating products within that space, within that industry. From there, you know that based on this business model, right, I think they're going to take at least a minimum of 3 to 5 years. So you know for a fact that your money is going to be locked in for 3 to 5 years. Are you cool with that? But a lot of people were very blessed. They were very, very fortunate that this never ever happened. They put their money in 1 to 3 months. They're like, okay, I don't need the money for the next 1 to 3 months. And then it listed, boom, at that time back in 2017, everything was going up. Okay, there were very little companies or ICOs that never actually really flipped a turn, flipped a 2x or a 3x. If you really couldn't flip a 2x or 3x, right, you're really unlucky. Seriously, you're really unlucky. So, but right now, the space is changing. So your liquidity is very, very important, because if you step into an investment and you know for a fact that this is going to be a year-long ICO, I think there are certain projects, right, that will lock in your money, okay, for at least a minimum of 1 year. And if you are a high net worth investor, once once the token gets listed on any particular exchange, right, apparently you're not going to get all your tokens at one go, so that you're not going to have an advantage over the market, right? Because you are a high net worth investor, they're going to lock you in. Whereas opposed to the public, where they're buying in smaller tranches, anywhere from a few $100s to maybe a few $1,000s, that's not going to move the market much. But if you're coming in with a 200,000, 300,000, and that could really shift the market to your advantage, especially if the token price really goes up once it gets listed. So there are companies that actually have locked down. Are you cool with that lockdown? So you have to see your agreement, okay? You have to see your agreement if you're of that level. And then from then, if that agreement is fine with you and you're saying, nah, it's cool, I don't mind locking up my liquidity for the next 1 year, and then after that, subsequently, there's a progressive release of my tokens. Okay, then you're cool. Then obviously at that point, you have already done your due diligence. You have already done when I say due diligence, means that you actually spoke to the team, because if you're going to be putting in 6 figures, the team will definitely speak to you. But the problem with that is that they'll tell you whatever you want to hear. Okay, they'll tell you whatever you want to hear. They'll tell you all the fluffy stuff. So unfortunately, if it's a new company, usually it's a no-go for me, right? Because there's a lot of stuff that right now you don't know, and it's very hard to validate. Now, when I do private equity placements, right? So maybe I share a little bit with you about the when I decide to lock up my liquidity and go all in into a young company, I usually see a few things. I see for the fact, now it's going to be a combination of quantitative and qualitative. So listen up. When I invest on a private equity round, right, what are the few things that I usually consider? I don't consider the fluff. Okay, to me, all that is bullshit. Okay, because you haven't built anything. But what I do consider is I like to speak to the people behind it, the team behind it. Because let me tell you one thing. Regardless of how solid a business model may look on paper, when in actual execution, it usually fucks up. Okay, it usually fucks up 100%. There will always be fuck-ups. It's just about how the team is able to rectify those fuck-ups as they progress. Okay, so it was a given. Okay, it's a given. And when I decide to invest, right, I always want to have a few rounds of coffee with the top people. Okay, the top people in the company, and I always want to do a lot of high-level validation. So I always have my cross references and resources that I can pull on. I don't depend just because the CEO tells me to do so. I don't depend on just because this CEO used to come from somewhere credible, I take his word for it. Okay? But a track record is helpful. Like for example, if you were to look at someone's LinkedIn, how do you know that profile was not created last night? Do you know that you can create a LinkedIn profile overnight and you can put whatever you want? Who is going to say that you are not a Goldman Sachs trader or analyst? Who is to say that, right? The only way that you want to go and dive deeper is this fella having other endorsements by people within the company before. That's, I think, one of the best ways that you can do that. But still, there's a certain level of privacy. You're not going to be able to dig. You're not going to call Goldman and say, hey man, is this guy in your company at the time? Goldman will be like, what the fuck? Who are you? Who are you to call and ask whether this guy is legit or not? You can't. Unfortunately, you can't. And it goes the same for a lot of things. So to me, LinkedIn and whatever is just a profile. It's just a profile platform. Although I have a LinkedIn account. But bear in mind, guys, if you can't validate who I say I am, why should you listen to me? You get what I'm saying? But obviously, if you want to come down to Singapore and validate whether I was a banker or not, yes, you can. You can walk into the companies that I was with, OCBC, I was with UOB, I was in Standard Chartered. You can go in, you can validate who I was. And the thing is, I used to have the license for as a financial advisor. Right now, I've quit the banking industry, so I don't have to have the license, right? But if I was still a practicing financial advisor, I would have to have the license, and I would have the license number for you to validate who I was. Because in the past, if I was to come and solicit for investments, for example, okay, or at least I'm pitching you for an investment, and you didn't know whether I was who I stated I was, and if you didn't trust me, of course, a bank business card wasn't enough. You could go and validate my number, and that number, that license number, is clearly printed on my card, so I cannot run away. But in this space, how do you know that this guy has the experience that he says he has, right? So I become so tight to the point where, what experience do you have previously, right? And what business did you have previously? If you already don't have that experience and you wanted to run a financial company, for example, or within the finance industry, but your business was in retail and sales, I'm like, okay. I'm not saying that you cannot. I'm not saying that you cannot venture into something new. Okay, entrepreneurship is all about trying something new, but it becomes very out of the ordinary, and you're trying to raise money on experience that you don't have. That's a big red flag for me. So I wouldn't lock up my liquidity with a company like that. But if you match up, you have expertise in that particular industry, you have run a company that was within that industry. Not only that, impressively, you were able to generate revenue, and you were able to even sell the business off, and we can even validate by who bought up that business. I've got nothing to say. I would definitely consider investing, because you have that, right? But being an entrepreneur is very different, because right now you are intending to raise 5 million, 10 million, 20 million. Why should I come on board? So you have to always ask yourself this. Naturally, you'll be thinking, Ryan, hold on. This is way too deep. This is way too high level for me. I just want to get in. I'm just hearing for a fact that my friends are putting their money in randomly into certain cryptocurrencies and ICO projects, IEOs, STOs. I don't want to miss out. I don't have time to do all this. I only want to put $1,000. Well, that's really entirely up to you, because I wouldn't put my money in, especially if it's hard-earned money, if I didn't do the steps that I took. You get what I mean? I completely understand. That no one wants to go and doesn't need to go to that level. But if you could, it would be great. So, as long as, okay, just a ballpark figure. As long as, right, especially if you're someone who has a job, okay, especially if you're someone who has a job. Now, this is non-financial advice once again, right? Because I have no right to tell you this anymore. But back in the day, as long as you had 6 months to 12 months of liquidity, right? Usually, especially if you're talking about an endowment plan, an insurance plan, it's fine, because even if you lost your job, right, you would have 6 months to 12 months of savings, right, stored up so that you can handle the existing liabilities. So when you are going to go all in, as per se, right, and invest into something, if you have the liquidity to do so, make sure that you have money to pay for food, transportation, your utilities, right, your rental, or maybe your mortgage. Okay, all these things have to be taken care of first. And the fact that why people's lives were wrecked, because they didn't plan for their own liquidity. They were so emotionally driven to want to get in and step into the space, right, that they completely just ignored for the fact that they had to pay all this, because they felt that, wow, if next week this goes up 50%, from my 1,000 I have extra 500. This extra 500 I can do so many things. I can pay for another month's rental or whatever. And if I put in $10,000, that $10,000 would be $15,000 by next week. So I'm definitely going all in today. and the market tanks, or it turns out to be a scam. It just wasn't ready. It didn't raise the amount and it could not get listed. Your money is stuck, and what are you left? What are you left with? Going into the community Telegram. Hey admin, when is this going to be listed? Hey admin, I haven't received my tokens. Is everything all right? You already sent your coins. You know what I mean? You don't anticipate that these companies are going to return you the money, because to them, I'm still in my fundraising round. We've decided to extend our fundraising round, ladies and gentlemen. So for now, we are still going to proceed with the ICO because they don't want to return you the money, right? They want to use that money for whatever they need, right? And you're stuck. You're just stuck. That's the danger. That's the danger. Now, the last and final one, right? The last and final one before you go all in, okay, is this an existing project? Existing and established. Okay? If this company, right, is existing, established, they are making headway, okay? You've been following them with the fact that you have experience and the knowledge, and you're able to quantify them qualitatively and quantitatively. They have the liquidity. That means they didn't dry out during the bear market. They didn't dry out. They're still building. They're still hiring. Okay? Then you've got something there. Then you truly got something solid. Because right now, the tip that I can really give and add of value right now, and those especially who have watched to the end, okay? Why don't you go for existing or established companies? Why not? Why go for new? Why don't you go for existing companies that have tanked 80 to 90%, okay? And they're already on sale right now because the market has clearly just pushed them down, but quantitatively and qualitatively, their value is that much higher. That means they're way undervalued. Why don't you look at that? Why don't you start looking at companies that you previously probably invested at the high, and if they're still around and you like what they're doing, that's when the double down happens. That's when the triple down and the all-ins happen. Because you know for a fact that I've been stuck in this for close to 2 years, for example. I've been stuck to a particular project for close to 2 years, and I didn't get out. But I know for the fact that this company is doing well. Ryan just mentioned that this CEO is doing this, this CFO is doing this. He's making headwaves. He's forming strong partnerships with brands that I actually know. He's getting investments in. He's even buying up companies with the money that he has raised to reinforce their infrastructure. This company probably has something there. This company actually has a product suite that is already revenue generating. That's when you start thinking, and that's when you should start thinking about going all in, because that is the point where if you already covered all your bases, right? That's when, if you have covered all your bases, then when you go all in, right? That's when you reap the profits and the benefits, because you know for a fact that this is not going to go wrong, right? Would you have known that Apple would be the big boy that it is today? Would you have known that Amazon is going to be such a titan in the e-commerce and fulfillment business? You didn't know that. If you were to listen to Jack Ma's pitch back in the day in his room, the way he looked and the fact that he was a teacher, see, zero experience. But if you had known and you had trusted this individual and you felt that his integrity and intelligence was there, and you decided to just put a small amount of money and you held it all the way, you'd be a millionaire to a billionaire. I am interested to find these companies. I'm very, very interested to find these companies. And that is what you should do. You have to be dedicated to this space, guys. You have to be dedicated to this space. It's not something fluffy. It's not something that you want to do overnight. Because if you want to truly be a millionaire investor or a savvy investor, you eat, breathe, and sleep doing fundamental analysis. You eat, breathe, and sleep doing lots of qualitative analysis. Okay? There's no two ways about it. It's not about looking at someone's YouTube video and asking them, hey Ryan, what do you think of this token? Hey Ryan, do you think that this token is a good long-term investment? I wouldn't know, because I'm not involved in that, right? I could look up and briefly look at it and give you an overview, but it means nothing. If you couldn't even go through the steps that I took and you decided to go all in just because this YouTuber reviewed it, good luck to you, because you're going to have a 2017 scenario, right? And because of the way that you decide to invest very haphazardly, you're going to lock up your liquidity. That could potentially actually cause you to not be able to fulfill all your existing liabilities. And of course, you're going to be very pissed off with that particular person, because hate drives hate, right? You're like, oh, this guy is an idiot. This guy doesn't know what he's talking about. I lost money because of him. So wait a minute. So I have to do all the work for you. So my question is, who the fuck are you? You know what I'm saying? So this is the thing. This is the thing that you have to start understanding, that this is a high level business, guys. Investing is a high level thing. So do you want to be an investor, or you want to be a speculator? The worst one is to be a gambler. That's even worse, because you're just going in blind all the time. But if you really want to be a high level investor, I strongly suggest that you start looking at resources that are going to help you out make these very valuable decisions. Because if you want to have life-changing income, folks, this is what you got to do, right? You may not have time to start your own business, right? As you know, we've already started an entrepreneurship series. I've been talking a little bit more about entrepreneurship, but hey, not everyone can be a business owner. Not everyone even wants to start a business or has the time to start a business. But if you want to be a high-level savvy investor, right, I think there's still an opportunity to do that. And right now, this asset class is going to be able to give you that opportunity to do so. Because with all the infrastructure, I have no doubt in my mind that this space is going to be a $1 trillion market, or if not more. It's just a matter of time. I cannot give you the time. I cannot give you when. But I definitely know it's going to be a $1 trillion industry in no time. And I'm very happy for the fact that right now, it's only at 135 billion. Or 140 billion, whatever it is, it's still a baby in comparison to the 21 trillion stock market. It's still a baby compared to the forex market, where 4 trillion is being traded on forex daily. It's still a peanut, guys. So right now, if you understand all these things that I'm saying, or if you really need some help, we have free online courses, right, that are available on Udemy. And at the same time, we have a paid course. We have the CG Protégé group, that if you want and you want to be serious about looking at trade recommendations, catching up on news that is valuable and viable to you, that's also available. Last but not least, guys, at the end of the month, I'm going to be conducting a masterclass. Yes, I'm going to be sharing in depth for the next 2 days, right, on the 30th and the 31st of March, right, on how I am going to be validating from a fundamental standpoint, investing, everything. I'll be sharing everything that I know in that masterclass, okay, everything. And also at the same time, Andy's going to help out in terms of help out and teach everything he knows about technical analysis as well. And the combination is just a marriage made in heaven, guys. So it's going to be 2 days, hardcore. It's going to be with practical workshops and everything from literally what we do. We're going to teach everything. So if you're going to be in Singapore, or if you're already in Singapore, guys, 30th and 31st, you can go and sign up on that. Okay, so that's all I have to say, guys. That's all for today's episode. I hope that it was of value. Smash that like button, guys. Come on, please, man. Smash that like button if you felt that it was of value. If, of course, it was shit, it was too long, give it a thumbs down. You know, that's the only reason, because it was too long. Thumbs down, okay? But nonetheless, subscribe to the channel if you want to get more information about investing in crypto and trading crypto. And of course, please click on the notification bell so that you do not miss another live stream. I'll see you in the next live stream, guys.